Anshul Saigal too joins in on the show right now. Anshul, hi, afternoon. Good to have you on the show. Let's start off the discussion with, in fact, chemicals because not many on the street are convinced about the prospects of a turnaround for the sector. What are your thoughts?
Afternoon, Aisha. Nice to be with you. Thanks. So, chemicals, over the last 2 years, we've seen everything that could be a headwind for the sector play out. Volumes came down because there was oversupply in the markets. Also, raw material prices went up because there was global inflation. Both of those impacted operating leverage adversely. Margins came down, and that impacted also stock prices because, in any case, they were priced to perfection. Now we are seeing prices having corrected some margin of safety in this space. We are also seeing raw material prices cool off. Inventory in the system has eased off as well. So we may be, if not at the bottom, somewhere close to the bottom as regards demand patterns and also margins. This can't be anything but good for this sector, given that prices are also stock prices, that is, are also, leaving much on the table at this moment. So if someone is not investing for the next quarter, 2 quarters, and is taking a longer term view in this space, there may be many opportunities in this space to take advantage of.
Okay, there are opportunities in the entire chemical space, but Anshul, what's the view on Indigo? Last week we had seen that big upgrade come by from Kotak. Today as well, the stock is flying away up 4 to 5%. One part of the street believe that the best is over and the peak profitability is behind, but clearly the stock price is telling you something else.
Anisha, rather than talk about the individual stock, let me give you a broader perspective and then we can all draw conclusions on the stock itself. Clearly, this is a market where you don't have pricing power. And so, what will differentiate one company from the other is how well you manage costs. This company in particular is clearly a more than a 50% market shareholder in the industry. And people go to a company in this space for two reasons. One, they get cheaper prices on their tickets. Second, they reach from place A to place B on time. And whoever does that well gets the bulk of the market share. Given that this company or a few companies in this space have exhibited these trends, clearly they will gather market share, and consistently there will be a shift of market share towards such companies. We also believe that whoever manages their operations, their entire supply chain well in this space, will be able to tide over cycles in this space. As we all know, raw material, which is petrol, ATF, that price goes up and down quite frequently in this space. And if you manage your supply chain and costs, you will manage your operations very well, which only a few companies do in this space. So, and also, in context of where India is, we are somewhere close to 400 to 500 aeroplanes, last I remember, versus I think China is about 10,000, or is it the US, which is 10,000? So we have a huge room to grow in this space. A few companies manage costs well. So it's quite clear that the opportunity size affords that a few companies will become much bigger than where they are today. And one should not again play for the 1 quarter, 2 quarters, just buy and sit tight for the long term.
Does this argument also hold for another market leader of telecom sector, Bharti Airtel, because it's become one of those four companies which has hit the market cap of $100 billion. So it's the fourth company of India to do that. And that stock is sitting at life high levels. And I know you don't want to stock specific, but Telecom, Airtel, does it go by the similar theory you talked about Indigo?
Anisha, again, this is a very interesting space. What we are seeing in this space is significant consolidation. When we used to, in the 2010s and around that period, have about 12, 13 players, profitability was quite weak. And there was significant consolidation. Number of players came down to 2 to 3. In fact, till recently, one player was also in the doldrums till they raised money only recently in the last 1 or 2 months. Given this situation and given that there has been price cuts in this space, We used to be at 200 rupees ARPU. That ARPU number came down to as low as 110 over a period of time. And from there, we have traversed to about 200 bucks again. This doesn't take care of inflation also in this space over this last 5 to 6 year period since the large player, with deep pockets came into this space, which is Geo, in fact. Given where we are on ARPUs here, there is no room for ARPUs to go down any further, and every room for ARPUs to actually move up from here. And in commodity sectors like this, pricing determines where stock prices go. If prices of making calls and of data go up, clearly that will have a positive impact on stock prices as well. And since we have only a few listed players, of those, even lesser are financially stable. Those companies which are financially stable will benefit disproportionately, and that will also reflect in their stock prices.
Right. Okay, let's detour for a bit. And just earlier today, we caught up with Milinda Karmarkar from Dalal and Brocha, and we spoke to him about his views on retail, considering he's been a big bull on the retail sector for quite some time now. Let's hear out his views.
If the retail interest is so high, that means brokerages will do well, PMS schemes will do very well, SIPs means mutual fund AMCs will do well. What are you betting on in terms of this rise of retail investor and the big beneficiaries of this rise of retail investor or stroke financial inclusion theme?
So, we have always been invested in banking. We have not taken a bet on asset management companies, and I'll tell you the reason for that. They will do well over a longer period of time, but shorter period of time there is a possibility, I don't know whether it will happen, that their fees may contract. If that happens, there could be some stagnation. Maybe we'll look at it at that point in time, but right now we miss the getting it into it early, but as of now we don't want to buy it.
Okay, so shifting focus to what's happening in some of the other stocks, Poonawalla Fincorp is actually coming under pressure. No incremental news flow as such that I can spot, but nonetheless, that stock is down 6%. Poonawalla Fincorp is the stock I'm talking about, and Aarti Industries is the other one, which is actually holding up quite well within the list of chemical names that we pointed out. Nuresh, Aarti Industries, Poonawalla Fincorp, any recommendation?
So Poonawalla Fincorp is still an avoid. Aarti Industry looks interesting for the fact that we've seen a small range breakout and it had corrected quite a bit from 770 all the way down to 600, 620 levels. So this could make a recovery towards 700. So it would be a buy on dips from here on. But 700, 730 would be a stiff resistance. So it's a extremely short-term trade with a stop loss below 630.
Right. Okay, that's the take coming in on some of the buzzing names. I also want to check in on Raymond, given the fact that they're looking to, develop the residential project in Bandra East, wherein there's a revenue potential of almost about 2,000 odd crore rupees. The stock started off the day well, but again, it's come off like the rest of the market from the day's high, still going good by about 3.5%. In fact, we should bring up the one-year chart for Raymond because the stock has been quite the performer, or for that matter, even the last 2 years. There's also an order win for Ward Wizard. They've bagged an order worth about $1.25 billion in the EV segment from Philippines, and that stock as well has been doing quite well, 28% higher as we speak right now. And then KEC as well, again a bunch of order wins. That stock as well has been seeing quite a bit of buoyancy. Okay, in fact, we chatted with the Ward Wizard management. Let's listen in to what they had to tell us about this particular deal. We will play it out in just a second from now. But yeah, in this last 6 months, the stock has been a lot more frugal again, I must say, 9.25% move. Today, of course, after that sizable trigger that they had with this mega order win, of course, it's making up for the relative underperformance in the last 6 months or so. Can we toss across to that bite now? Yeah.
Top line, if you consider for this financial year, other than the order which we would be executing in Philippines, we are expecting somewhere around a top line of 650 crores with two-wheeler share of around 60,000 vehicles we would be producing, and three-wheelers we would be producing somewhere around 5,000 units. What I oversee is we would be doing around 25 to 30%. Our share would be towards export, and next financial year, I oversee that our exports would be not less than 50 to 60%.
Okay, that's the take coming in from the Ward Wizard management. But Anshul, where is it that you're seeing opportunity to deploy fresh money, if at all, or would you say just wait it out? The market has hit an all-time peak, and so have valuations pretty much across the board.
Aisha, I've been as I mentioned earlier on your show, I've been a professional portfolio manager. Now I manage personal capital, and so I can kind of see both sides and kind of gauge what position the market is in today. At least I think I can. I could be wrong though, but I have a feeling that at this moment, this is a market which is highly in favor of the individual investor, because the individual investor does not have portfolio complications to manage, and he can look at bottom-up opportunities without having liquidity concerns, because he's not managing as much money as a professional manager. And there are dime a dozen opportunities where you can pick stocks which are reasonably priced, where the future looks quite bright, and investors are really not focusing on these pockets. Also, in our judgment, it is not valuations that prevent downsides. It is really earnings growth which prevents downsides. And the situation that the economy finds itself in today, as also the corporates as a result, we feel that there is earnings tailwinds which hasn't been seen in quite a long period of time, and those tailwinds will ensure that downsides will be limited in this market. With that context, let me tell you that I find a lot of opportunity in manufacturing, capital goods, some even in defense. I think that the rural sector is one space which is primed for a takeoff in the next, say, 6 to 12 months. Particularly discretionary plays in the rural space, those will see significant tailwinds, because that is a space which has seen a low pleasure from the markets over the last 2 to 3 years. And we think that there is going to be an uptick in that tide coming in the next coming 6 to 12 months. We do also believe that financials are very attractively priced. If you noticed, in housing finance itself, there has been 40% growth in recent times. Of course, there is the base effect because of HDFC merger. But aside from that, also housing finance is doing exceptionally well, while credit cards have eased off a little bit, but by and large, the banking space continues to do very well. In our judgment, banking and finance looks attractive. So there are ample opportunities in the market which don't appear expensive. You could find opportunities in banking space in the 5 to 10 times price to earnings range. I wouldn't call that expensive by any measure. So there are reasonable opportunities in the market to take advantage of.
Okay, so that's the point coming in on some of these select sectors and stocks. But let me toss it across to Sharad and try and understand what the buzz is in the dealing room, because the markets are fairly volatile. In fact, Nifty is back in the red. Sharad, what's the chatter like in the dealing room right now?
Well, yes, in focus is Karur Vyasa Bank, and what we are gathering from the dealers is domestic institution buying is coming in the stock. Largely a PMS has added its position, as that's what the dealers have been talking about. Roughly 27 lakh shares have exchanged hands, which translates into 0.3% equity. Now the stock itself, if you look at it, the mutual funds are having 21% stake in the company itself, with the names of UTI Mutual Fund, Nippon Mutual Fund and ICICI Pru Mutual Fund having a significant stake in the company. The stock itself, but is trading at its lifetime high levels, and key triggers also is something which we'll be focusing for the stock. Q4 numbers are of course very strong, and it's expected that the earnings might continue in a positive manner for first quarter as well, because of two reasons. First is a higher business growth is expected to come in with the combining a 4+% margins going ahead and favorable credit costs as well. Now even the analysts are estimating for FY26 itself, the company might deliver a 17% ROE, which is the return on equity. So overall, Karur Vyasa Bank is in focus as we are seeing domestic institution buying for the stock.
Okay, thanks Sharath for that. That stock had about a good 7% right now, but that's not alone. A lot of stocks to give it company. Z, for instance, has managed to see a spike of almost 5% in the last few minutes. Samil is one stock that has been doing very well for itself since the start of the trading session. Of course, all the cement names as well as Indigo has been in focus. UBL2 in the last few minutes has perked up. Tata Chemicals. So a lot of these are buzzers in the trading session right now. But one space which is clearly coming under pressure is IT. Emphasis is of course reacting to that large block deal that happened wherein 15% equity changed hands, but still managed to get good amount of buyers because the stock has managed to recover. And there was a note coming in from IFL Alternatives as well saying that the overall weightage can increase for MSCI as well as FTSE indices now on Emphasis. So that stock is in focus while the others like Coforge, Persistent, Infosys continue to be in the red. Nuresh, any bet from the IT sector that you would want to make right now?
So not really convinced on the sector as such, because whatever we see is we see a 2-day spike and then again we see a fall, at least in the large cap names. In the mid cap names, we have stocks that have corrected quite a bit. So something like a Birla Soft on declines looks interesting because it corrected all the way from 850 to 600 levels. So that could be a buy closer to 650 odd levels and can expect a slow comeback here towards 720, 750. So that would be the only one as of now which looks promising.
Okay, Emphasis in the meantime, that stock definitely has been lower. Remember that 15% equity changed hands earlier today in a bunch trade, and Blackstone is the likely seller around that 700 crore rupee mark. That of course is the worth of that 15% stake. But a lot of events in Mumbai, and Maharashtra Chief Minister Eknath Shinde inaugurated the northbound arm of the Mumbai coastal road from Worli to Marine Drive just today, similar to the southbound arm which was opened for vehicular movement in March this year. The northern arm of the coastal road will be operational only between 7 a.m. to 11 p.m. only on weekdays so far. Astha, my colleague, is here with the ground report.
Yeah, we are here in the Coastal Road Phase 2, which starts from tomorrow for the public. As you can see, Eknath Shinde is here to inspect the Coastal Road Phase 2, and he is inspecting all the construction projects, and it will be working after that. So the inauguration is taking place right now on 10th of June. And talking about this coastal road, it's just like the Phase 1. It has tunnels, it has cycling routes, and it's 6.98 kilometers long, and it will cut the distance from 45 to 50 minutes to 10 minutes as well. It will be very helpful for the commuters, and this coastal road Phase 2 connects Marine Drive to Hazira Ali Chowk. So this will be the project, a mega project. The Phase 2 opens today. As you can see, CM is right behind us. He's inspecting the tunnel. Also, Mr. Fadnavis is also accompanying him. We are right now in the tunnel, which is very customized, made vacuum-based tunnel. This is. It has 3 lanes, especially for the ambulances lanes. Also, it has emergency exits where if there is any emergency, people can rush out of their vehicles and can get out from the gate as well. So this is a giant project which is being inaugurated right now by Mr. Eknath Shinde, who is the Chief Minister of Maharashtra, and we can see the cars lined up, and it will be inaugurated and will be open for the public tomorrow from 7 a.m. to 11 p.m. for 16 hours, and it will be operational from Monday to Friday for 5 days. As we are covering this tunnel, have a look around. This is the tunnel Phase 2, which will be opened for the public for ease the traffic control in Mumbai.
Okay, so life of the commuters being made easier in Mumbai, but of course a lot of projects are underway. Let's see as and when they open up, but at least a part of the coastal road has started for the commuters as well. But as we were highlighting, the life insurance data of the month of May was quite strong. My colleague Anurag is now with us to talk to us about just that. Hi Anurag.
good set of numbers shown by life insurance industry in month of May. As per the data released by Life Insurance Council, life insurance industry in month of May has shown a growth of 31% up to the month of May. Otherwise, if we talk about the only month of May, then premium growth is 15.15%. So if we talk about the listed players in the life insurance space, then ICICI Prudential has shown a growth of 31% in month of May. If you talk about the first 2 months, that is up to the May month performance, then ICICI Pru Life premium has gone up by around 10%. Another listed player, HDFC Life, has also shown a very good performance in month of May. HDFC Life premium has increased by 14% in month of May, and up to the month of May, the premium is up by around 10%. SBI Life has disappointed in month of May. So in month of May, SBI Life premium is down by 2.5% as compared to the last year, 2023 May. So premium stands at 2,354 crore against the 2,414 crore in May 2023. Biggest player in life insurance industry, LIC, has also shown a good growth. If we talk about the data of up to the month of May, LIC has shown a growth of 46%, and in month of May 2024, LIC's premium is up by 18.74% as compared to the premium LIC earned in May 2023. So good set of numbers by life insurance industry in May 2024.
Okay, that's a bunch of life insurance data, and let's just see what those stocks as well are up to. SBI Life, of course, hasn't had the best performance, but the rest of the pack should be holding up. HDFC Life has also been a key gainer. In fact, I think last week, Kunal, some of these stocks did make a move as well, right? I remember it was part of the recommendation list as well of a few experts.
Yeah, I think HDFC Life, SBI Life and ICICI Pru, I think all these stocks have recovered around 10% from their 3-day, 4-day swing lows. But the concern for these stocks is that they're still into a pattern on the weekly, monthly charts of lower highs and lower, tops. So I think low bottoms. So I think in that sense, I would probably expect that maybe this could be just a feeble rally for these stocks before they get back into a selling or a corrective mode yet again. Many of the stocks, for example, HDFC Life is still trading below its 200-day moving average. So I think in that sense also, I would probably believe that the first real test of the breakout or the rally would probably happen when these stocks come back closer to their 200 DMAs, and then they consolidate over there for a couple of weeks before they get into a breakout mode. So I think we could probably be in some distance away for these stocks to give a powerful breakout. As of now, it could be a meaningful bounce, and traders could look out for maybe another 3 to 5% on the upside.
Okay, point taken. So that's a view on some life insurance companies. But Anshul, I also wanted your take regarding some of these housing finance companies. Our colleagues were telling us from the North Corridor that there's increased clamour of affordable housing. There will be some more announcements for the housing projects for rural as well. In view of that, would you take a bet on any of the housing finance companies, affordable segment especially?
Anisha, this is a very interesting space in our judgment. There are certain names in this space which are quite attractively priced. That's also largely because there is, either technical reasons for which they are priced low, or there are company-specific reasons which were temporary and which may go away going forward, because of which prices have been impacted adversely. In certain cases, there is because the prices are low because there is PE selling in those names. Private equity holders are selling in those names. That is keeping those stocks at lower levels despite operations showing significant uptake. Also, if you see the capital adequacy of many of these companies, they have as much as 40 to 45% capital adequacy, which suggests that there is substantial room for growth with existing capital. They don't need to raise incremental capital. In that scenario, if these companies have consolidated 2-3 years, it offers an opportunity in our judgment. There are also certain companies which were down and out after the IL&FS crisis, where there were credibility issues and which have raised capital of late and trade at really ridiculous valuations where there may be opportunity going forward. So there are tailwinds in the sector. Prices are attractive in many sub-pockets of the sector. And we do think that this is an uncertain space where uncertainty should be attractive for the investor because prices are low because of the uncertainty. And so we are definitely positive on this space.
Right, okay, that's the take coming in on some of these buzzing names right now. Just get your status check of how we're, closing in on the market or on the day-to-day. Lifted off the day's highs, but again, that recovery also is now getting sold into because we're back down about 85 odd points. 23,240 is where we're currently at. You can see that downtick trickling in once again. Kunal, is this consolidation headed in for a bit of cool off? Or do you think it'll be largely flat or range bound for the next few days?
No, I think historically what we've seen is that whenever there is a sharp phase of correction, that's a zone where we see sectors churning, and the previous sectors and the ones which have been rallying up higher, they tend to underperform, and then there are new sectors which emerge as a trend. But when stocks or when the indices rather go into a very tepid kind of a consolidation, which means a range of say 200 to 400 points broadly for the Nifty and 500 odd points to 800 odd points for the Bank Nifty, then we are looking at the same patterns playing out. It's just that the excesses which gets played out into the stocks and sectors when these stocks rally up by margin of 5-10% or for 3, 4, 5 consecutive days, those excesses get ebbed off. So I would probably believe that we are into that latter phase where potentially many of the stocks which have rallied up in the last 3, 4, 5 days and the underperforming ones, they could probably cool off for a couple of days before these stocks come back into a neutral territory in terms of indicators, and that's where I would believe that a better trade could originate for many of these names. So the view and the bias still remains on the bullish side for the indices. It's just that I think after this 1,000-1,500 point plus kind of a recovery, very fast recovery, I think we just need to digest these gains over here for the indices.
Okay, pause before you run again, digest these gains. That's the view coming in from Kunal. But in the meantime, a lot of stocks which are buzzing around, especially from the cement sector as we have been highlighting. But infrastructure as an entire theme has been doing quite well. And in fact, this is a conversation we had with the management of KC as well. They maintained their guidance for the entire year to be around 15 to 20% kind of growth. But margin is something which is expected to be closer to double digit by the end of the year. They're also quite positive on residential real estate. Listen into a slice of that conversation.
FY25, what we have talked about is that we should be somewhere around 7.5 or so on the margin side. And we expect that in Q4, when we are exiting FY25, we should be, closer to double digit between 9 to 10%. I think we are clearly very bullish on the residential sector. We operate with select large developers, but I think the amount of inquiries we are seeing, the amount of orders which we have, is very significant. Along with residential, we are also seeing some movement also in the commercial piece, which was not there. So I think between residential and commercial, I think we should see a good order intake.
Okay, let's take in some BTST trades before we wind up for the day. Kunal, what's your list like?
So I'll go with the buy in Laurus Labs. That's a stock which is inching towards a breakout about the 440 plus mark. So would suggest a target of 466. Stop loss to be kept at 433. And Aarti Industries is the other stock which is also giving a breakout in the hourly chart. So a momentum trade over here, targets of 700, stop loss at 650.
Right. Naresh, what about your BTST ideas?
So first would be a buy on Axis Bank, which is showing relative strength, stop loss at 1195, target price of 1230. Second is a breakout trade on Shree Cements with a stop loss at 26,950 and a target price of 27,600.
Anshul, Kunal, Naresh, great to have you guys on the show with us.
If you like this video, then like, share and subscribe to ET Now.